Hello?
Yes, hi.
Terrie, you're good to go?
Yes, I'm good to go.
Yep.
Hello.
Hi,
Okay,
Terrie.
so I'm excited to be here today having a conversation with Alan Sarhan. So this is part of the series of the Real Estate Investors Club that kind of tries to unpack some of what's going on since the beginning of the COVID crisis so that we can all make more informed decisions. And so I'm really excited to be talking to Alan today. He's a lawyer at DLA Piper. And he has experience in corporate law, business law, engineering, construction law, and also some, international experience and stuff like that. And so I'm excited to hear, like he has kind of a fair amount of commercial clients, and so I'm interested to talk a little bit about the legal aspects of what's going on in terms of how it concerns landlords, and also kind of the the new measures that have been put in place and stuff like that. So, hi, Alan. How's it going?
Great. Hi, Terrie. Thank you so much
Alan,
for
are you
having
there?
me. I'm really looking forward. Yeah, can you hear me? I can hear you, and I heard the
Hi, Alan. I
question
can't hear
not
you.
I think there's just a little lag in the conversation, Alan. So yeah, I'll go ahead, Alan. So yeah, you can present yourself.
Okay, great. So yeah, I can hear you clearly, Terry. Thanks a lot. I'm very excited to have this discussion with you and the members of the club today. Really unprecedented time.
Okay, sorry, just go ahead.
And as I often...
Yeah, okay, we're good now. We're good.
I think there's a little delay. So, yeah, I think Terrie. Yeah, I think she's way behind. I'll just cut our mic. Go ahead, Alan. Go ahead. Go ahead. You're up and running. I've cut the mic, and we'll see if she's able to get back on stream. So let's go. You can present yourself. Sorry about that. Technical problems.
Great. No, I'm just very excited to be here, like I was saying. And one thing we've been hearing and saying lately is the impacts of this pandemic is huge, and in particular on real estate investors and landlords, because all businesses involve, to a certain degree, most businesses, landlord and tenant relationships. So it's something that we're seeing a lot of. See that Terry's dropped off.
Yeah, I think Terry's.
I'm back now. I'm back.
You're back. love of being live and the internet. So I'll be standing by if there's anything, Terry. I'll recoup the interview. So yeah, so Alan just introduce himself. So I guess you can start with the questions.
Yeah. So Alan, I guess the first thing I wanted to ask is just if you could give us the state of the union in terms of what you're seeing, with your clients, and what kind of issues are coming up, what kind of concerns do people seem to have?
Okay, so I advise on both sides of the coin. Sometimes it's for tenants, and sometimes it's for landlords. And I've seen a number of things occur lately. So obviously, let's make the distinction between residential and commercial. To be quite frank, on the residential side, we've seen less concern, but we feel it is still early days. Obviously, there is sort of a suspension of any evictions for the time being, and there does not seem to be an incredible amount of defaults. At least we're not seeing many, because some stimulus has been put in place quickly. So unless we want to address that specifically, talk a bit more about what's happening on the commercial side of things. Obviously, there's been massive business disruption, and that is leading to a number of things. One, there's the very legitimate concerns that some smaller commercial tenants will have, where they're not considered essential services, and they really are prevented from in fact, they are ordered by the government not to be open. So that's something that we see, and then it puts the landlord in a difficult situation, of course, because the letter of the lease may suggest, depending on what it says, may suggest either that we're in a force majeure scenario, or if we don't check the box for force majeure, we can get into that in a bit. You are in default. The tenant could be in default, but what is that really worth in these contexts? So we could talk about some strategies on how to deal with that, and what I've seen so far.
Yeah, well, I mean, maybe just if you could give us a little sense of, I don't know, percentage wise, or what kind of, because I think we're all trying to get a sense for what's the impact on this going to be for our own portfolios, but what's the impact going to be, let's say, for society at large, which is in the end going to trickle down. So percentage wise, in terms of what you've seen, what's your gut feeling for how many commercial tenants are in default, how many are on payment plans, how many are paying and wait and see?
So far, I can tell you that we do not see a serious decline yet. It's hard to put a percentage to it, but we are anticipating that the situation is going to get far worse as the dust settles. what we have noted is that for the month of, I guess, March or April, the April payments generally have come in for a number of commercial landlords that I'm dealing with. But we have seen some cases of some opportunism, where some of the larger, more sophisticated tenants have lawyered up, and they've sent long letters suggesting that this is a force majeure, and they are in fact instructing the landlord that they will not be paying, or just advising them that they will not be paying, not necessarily asking, but sort of trying to set out terms for rent relief, either through rent credits or rent deferrals. So on a number of occasions we've seen, and I don't know if some of the members of your club have seen that, and maybe they could post a little note about it in the chat box there, but people taking sort of a very aggressive stance, which then puts the commercial landlord on the defense. And the advice that I'm giving is that you need to react to that. You can't just let it go, because you could be tacitly approving sort of amended terms to your commercial lease. So it's really engaging with them in writing, and that's where you may want to say, or to challenge them, pull out your lease. That's always the starting point.
Yeah.
What does the letter of the lease say? If you feel that there is a default, then you should clearly state that, and engage with the tenants to see what a good compromise could be.
Okay. And if we go one step further, I mean, like, look, I'm not a lawyer. Obviously, like, I, read the little clauses at the end of my commercial leases before I sign them. But like, when we talk about something like force majeure, what exactly does that mean? And in a situation like this, how does that translate on the ground?
Okay, so it's a very interesting question that's obviously being asked a lot. Force majeure, I'll tell you what it's not to begin with.
Okay.
Force majeure is not hardship. So under Quebec law, we don't have this concept of hardship whereby rendering it very difficult to perform an obligation would allow you to get out of it. So that's not what force majeure is. Force majeure needs to be unforeseen, needs to be irresistible, and needs to be external to the parties. So what does that mean in terms of the pandemic? In some cases, also, by the way, force majeure could be modified by the parties in the lease. So you have to look very carefully at the definition that you have in your lease. In this pandemic scenario, an example that would sort of check that box is if you are deemed a non-essential business and you've been forced closed by the government, right? So you have no ability to actually continue operating, and you have no ability then to fulfill your obligation. So arguably, you could be in a situation there where force majeure applies. It just being very difficult and terribly inconvenient is not enough generally to meet that threshold.
Okay. And so then let's say, we play this down and we say, okay, so like, for example, let's say you have a tenant who's a dépanneur. Okay, they haven't been forced to close. They might have like a significant reduction in business, or they might only be allowed to let 3 people into the store, and that might affect their business numbers. But basically, a business like that would not be in a situation of force majeure. Whereas, for example, like a massotherapist or a language school or something like that would be. Yeah.
Correct.
Okay. And then
correct.
Like, let's say then we like move the unpacking a bit further down. So, okay, we've now decided that, okay, these specific groups of tenants are in a force majeure situation. So now what? You're the landlord, you know this. The tenant wants to maybe get some kind of rent relief. What do you do with that then?
So one, you've got to determine, are we actually in that force majeure stage, and your position. You should clearly state your position on the interpretation. Nothing will get resolved right now through the judicial process, or for many months. Mm-hmm. So it's also about positioning yourself for down the line and protecting your interests. If you believe that it is not force majeure, or you believe that the tenant is in a default situation, but for obvious reasons, you need to sort of come to some compromise, you should state that very clearly in writing. So we are of the view that this is not force majeure, or we are of the view that you are currently in default. However, given the circumstances, we'd be willing to discuss possible rent relief. I would never, as a commercial landlord, I would never advise you to sort of agree to the position that we are in a force majeure situation. I sort of skip over to the step where you talk about relief that you're willing to provide as a landlord. And ultimately, why would you provide that relief? Because you don't want to be cutting your nose off to spite your face. I mean, this is a very, very difficult situation for all involved, and taking a very aggressive stance, I know we'll touch on this later, may not may just be mutually destructive.
So let's again, move kind of one step further in the story. So then what happens? So now, okay, maybe you want to avoid the fact of getting into an aggressive interaction, because we're also in this funny situation where the legal mechanisms are basically at a standstill. I deal more with residential tenants, but the fact that the REIC is closed, it's a major thing, because usually what we'll do is when you come to an impasse with a tenant, okay, I'm going to open a file at the REIC and we're going to sort it out in front of the judge. But today, that's not an option that's available to us. We don't know exactly when that's going to be back on. And then once it does open, what are the delays going to be? Because chances are, not only has the REIC not been hearing cases for the last 2 months, but now you're going to have all these people who are somehow in default of their rent, and then they're going to have to catch up, but they're going to be working at half speed because you can only have one person in the room at a time. So in terms of more of a commercial situation, let's say you don't want to get into that aggressive, back and forth and let the court sort it out. What do you recommend people do, or what are some of the best practices that you see?
Okay, you're absolutely spot on. First of all, about the court processes. This is so unprecedented to have your courts closed, and courts at all levels are either closed or serious, operating at with a skeleton crews and just reserved for sort of emergencies. So you have to get creative. That being said, you don't know what things are going to look like on the other end. So recommendation number one is to document. If you have to have conversations on the phone, and I always recommend sort of staying close to your tenants. So it's fine to have conversations, but make sure you follow up with an email confirming the contents of that discussion. It's going to be a very long time before this stuff gets resolved before the REIC. So you want to look at creative solutions to avoid that one altogether. Talking about some of the solutions that I've seen, it really comes down to sort of a rent forgiveness for a short period of time, rent credits, or rent deferrals. Obviously, I like the idea of deferrals more so than an outright credit. That's a judgment call. You've got to understand your tenant's paying capacity, but deferrals is something that I will always recommend. And a deferrals for a couple of months. I wouldn't commit to too much. I've seen a lot of tenants ask for, well, I want a deferral for the next 5 months. That's unreasonable to me as a first ask. What I am recommending is that you say you agree in phases. So I will agree to a rent deferral for the month of April and May, and then either you're back on. It's very difficult for your tenants to repay the amount deferred for the month 1 and 2 immediately. So you do a prorated sort of payment plan for the year, for instance. So this is what we're doing a lot now. It's 50% off of April, 50% off of May, and you recoup the 50 off of June to December type thing. Go ahead.
But that strikes me just, off the top of my head mathematically. So let's say we're not sure if we're in a V or a U or a check mark in terms of what our recovery is going to look like. But, when you talk about deferring, and it just off the top of my head, it seems like, well, how are those people going to eventually recoup the amount they lost? if you ask someone to then start accelerating their payments, let's say 3-4 months from now, I mean, how realistic is that?
So you're saying the landlord, how's the landlord going to recoup?
Yeah, well, like let's say you make a payment plan with your tenant that like, okay, I'm going to give you, a 50% rent deferral. So pick that up, 3-4 months from now. Let's talk about the bill you've run up, and now let's figure out how you're going to like work that off or how you're going to pay it off. I mean, my question is, whatever the recovery looks like, then the tenant already is going to have to pay like a higher rent than they were paying. I mean, how realistic is that long term?
So, that really depends on the nature of their businesses. So we've seen, for example, take a karate school, one real live example. I mean, they're small commercial tenants, very likely mom and pop, running this business month to month. Or I mean, even worse, take a restaurant. What do we don't know when they're going to come back in line. Even when they do come back online, what's the consumer's appetite really to be in a packed restaurant?
Exactly.
Well, I mean, I wish I had a great answer but we may see some businesses just not make it through. And that requires, I think, to sit down with them and discuss what it is that their business plan is moving forward, to the extent they're getting stimulus, because there is a lot of stimulus out there. So I think it's important that you, as the real estate owners, get very well versed in what stimulus is available, and it equips you in your discussion. You want to know what wage subsidies exist, what small business loans exist, because if you're not equipped with all this information, then all you're going to be hearing back is, well, I can't. They're collecting their stimulus, and I can't pay my bills. So I think it becomes very fair to be like, look, unless you demonstrate to me that you've applied for this stimulus or give me some proof that you have this stimulus, I'm going to have to put you in default, and I will sort of move towards terminating you. It's really a balance, very difficult to sort of give one example, one answer that applies to everything. Obviously, you've all seen, I imagine the members have seen the commercial rent assistance program that was released earlier this week. Details still not clear. Some criteria that seems to have come out is that tenants must pay less than $50,000 per month to qualify, or have experienced a 70% decrease in pre-COVID revenues. And on the landlord side, they must have a mortgage loan in respect of the property. Now, we can discuss whether or not we think that's fair, or what the public for that is, but those are the criteria that come out. We're following that very closely, and I advise you and your members to as well. So stimulus is key. I do believe that the government understands both at the provincial and federal level the importance of bridging all stakeholders to better times. So I actually think that is going to be the saving grace for many.
But so let me say, like, I'm a small landlord. I don't have a big legal team behind me. If I want to stay up to date on exactly the letter of these specific things, what's the best resource for me? Like, how do I go about understanding those things to know if it's even worth my time to sit on the phone for X number of hours with Service Canada to apply?
So this is, I'll plug my own firm, but enter any firm name here.
Okay.
A lot of accounting firms, law firms, right now are publishing and releasing lots of free information that is very, very useful, that at least will point you in the right direction. So if you go to DLA Piper's website, you'll see COVID-related documentation, but really not our own firm. Any accounting or legal firm at the moment is producing a lot of very good literature, and we've got people working full time just tracking this stuff. So yeah, before you pick up the phone and even call, legal counsel or Service Canada. There's a ton of information out there, and I could send you some links if you want to share with your members later. But a lot of good stuff.
That would be great. Yeah.
Written. Like even since we wrote an article not long ago, and I know that you shared it, but even since we wrote that article, there's been serious development, some changes and developments and qualifications around stimulus. So something to follow closely. One other thing from a stimulus point of view that's I think very relevant for your members and investors to consider is GST, QST obligations and your remittances, which are tracked on a payable basis. So you've got to be remitting GST, QST on what is payable, not paid. It's a very important distinction.
Yes.
So
yes.
If you're committing, there's a certain lease rate, and we saw this situation recently with one of our clients, and we advised them, walked them sort of through how to deal with that situation, which involved a lease amendment, because you're going to want to demonstrate to Revenue Quebec and Revenue Canada that that 50% credit or 50% deferral is actually reflected in your lease agreements. Because if they're operating under the payment terms of the lease, you owe GST, QST on amounts you're not collecting.
Yes.
So it's a bit of a trap. Now, the government has mitigated that because they've deferred the payment of GST, QST, I believe, till June 30th, 2020. But what happens after that? So something to consider, and the mitigation strategy there is in writing amendment to your lease, a COVID amendment we've done. So really something simple, 1 or 2 pages, addressing the fact that you're actually changing the term, modifying the terms of the lease temporarily or otherwise.
Okay. All right. Yeah, I think that's some really good advice, because it's not necessarily the first thing you think of, but for sure, if you're billing and the tenant's not paying, there's a presumed amount of income coming in, but it doesn't actually reflect what's going on. So I think that's valuable advice. So now just because I'm looking at the time go by, we've been chatting for almost half an hour. Let me ask you kind of a more open-ended question. I know both of us like to, we said it before the interview started, play amateur economist. So I mean,
favorite game.
Exactly. But like, let's say we all have, our segmented little view and our little experience of the part of the industry that we're in. So let's say, me as an investor, I and a property manager, I deal with, a lot of residential stuff. I see what my tenants are doing. I hear what's going on, but I won't have the same visibility, let's say, as you do, in a law firm that has maybe larger clients and has bigger things. So, if you had to look at your crystal ball and say, where are we going to be 6 months or a year from now? What's your prognosis of the situation?
Mm-hmm. So I've been practicing law, and I'm in this environment for 15 years or now. It's not an eternity, but it's enough time to sort of get my finger on the pulse. And I've never seen anything like this from a sort of business interruption point of view. It's not surprising, but I get to sort of see the direct consequence. And this is not specific to real estate, but I've never seen such sort of catastrophic disruption to businesses across all sectors and all industries. So that having been said, I'd be very surprised in my amateur economist through my amateur economist lens that there's going to be an immediate recovery to this, or this V-shaped recovery that people are talking about. We're talking unemployment rates that have never been seen since the Great Depression, from what I understand. And I don't think enough time has passed to really digest what this all means. You only have to look as far as your own spending spending habits.
Absolutely.
And I've seen a significant drop. I mean, discretionary spending has fallen to almost like the flat line for me and for many of my peers. That makes you wonder the domino effect and the waterfall of the cascading effect of that is huge. What does it do for people's appetite to purchase homes and to purchase condos or to upgrade or I don't have a crystal ball, but I don't think this will be as quick of a recovery as we all hope. It is event based, so it's provided that there is a reopening of the economy sooner rather than later, and I understand that is the plan here in Quebec and abroad. I think the recovery will happen. This is how I would say distinguish it from things you hear about in the Great Depression. I think it will come back, but I think it will take some time. Look at airlines and hotels, for example. I mean, when do you imagine being able to fly again or being in a hotel room?
Yeah, absolutely. And I think also, like, let's say, if you push that out a couple of moves, like if you think of even, the fact that campuses and universities have gone virtual, and then what happens with student housing. We talk a lot about Airbnb, and I think that's a small segment of real estate. So obviously Airbnb is in big trouble, and like maybe some landlords are going to be able to turn around and rent their units like as a classical rental to avoid losing their stuff. But at the same time, if you look at student rentals, like what's going to happen when people make different decisions? Are all the foreign students that were planning to come in September, are they coming? What about the summer term? I mean, presumably there are a bunch of students and a bunch of people that were looking at coming into, let's say, the Montreal market for a certain amount of time. That's going to be kind of affected. So, I think I kind of agree.
Absolutely. And then, I mean, I've been reading a lot of sort of material on how this experience is an accelerant of a lot of macro trends that we've already identified, right? So telework, for example, I could tell you, when this happened at the firm, we were quite surprised. We couldn't really imagine how a world where we were not physically working together, and within 3 or 4 weeks, we're seamlessly operating from a telework on a space. And so the questions are naturally going to be: do we need all that real estate? Do we need all that square footage? I mean, I do need a boardroom, and I do need some equipment, but I can guarantee that we don't all need a big office in downtown Montreal with 4 boardrooms or 5 board. Like it just doesn't make economic sense. And if you look at some of the retail trends right now, you don't need a crystal ball to say we're going towards e-commerce, but there were things like food and product, the click and collect at grocery stores that seem to be taking forever to come online. I mean, I think that's done. I think that people are now going to expect that, you click and you just drive into a parking lot and someone loads up your car. What does that mean to real estate at all levels?
Yeah, no, I think, and I mean, like we were also joking about the fact that we have little kids at home, and like we're adjusting to the new reality where we have to work with our kids. So my son's really into dinosaurs, and he one of his stories is about like the meteor hits the earth and then the dinosaurs die out. Well, like I kind of like that as a parallel for this. I think there was like maybe a gradual extinction or a gradual shifting process towards, let's say, less retail space, more Amazon, more telework, less office space. But I think what's going to happen is, as you say, it's kind of like an accelerating phenomenon, whereas now the meteor has hit the earth, and now we're going to observe that there's a bunch of sort of smokestack or like older ways of functioning that are going to slowly be moved, going to fall by the wayside a little bit.
Exactly. I mean, look at the mall, right? The mall, and look at what they've done in downtown Montreal with every mall is now an upscale food court. And that is a clear risk to, they've run out of idea with retail space, trying to turn it more experiential.
Yeah.
There's only so many of those food courts you can create. I mean, the pie of calories being consumed in a 2-hour lunch is not growing. So.
Absolutely, that's funny. Yeah, I'm just gonna come back a little bit to something that you said. So I watched that Monk debate with remind me of the person's name. It's Mohamed El Arian.
El Arian, the chief economist for Alliance. Allianz Insurance.
Yeah, and so he made one of the really great distinctions he made between, you hear people talking about recession or Great Depression, and what makes the difference between a really big recession and a Great Depression. And his analysis of that was that a depression is really once you have a lot of the structures and a lot of the businesses begin to die. So a recession will be more when there's an economic slowdown and we all have to kind of tighten our belts. And then once we start tipping into a depression is when you get a large amount of businesses failing. As a result, you have, maybe some of your banks lacking capital, you have some of your governments and it begins to erode things at an institutional level. And I mean, after that, he has his prognosis of where we are on that curve. But I think just in terms of understanding the difference between, people are throwing around the world with the word Great Depression a lot these days. And I think that that's an interesting distinction, because as we see things go forward, basically you understand the government stimulus packages as a way to prevent that dying off of businesses.
Yep. So it's a question of time, right? I think it's how long does this lockdown last? That's why the very important sort of public debate that we've heard is moving from the lockdown. And I mean, personally believed in the necessity of that for that initial period, but now sort of moving towards a gradual opening. Because I don't think you can flick the economy on on and off like a switch.
Yeah.
And the longer this goes on, I think the more likely sort of a recession turns into depression. Add to that, this is something that no one's really answering. I mean, some of the economists are discussing it, but someone's got to pay this stimulus.
Yes.
Right? So it's great to be printing
absolutely
money, but that just means that there's a debt that's being created somewhere else that our grandchildren or great-grandchildren are going to have to pay for. So there are some dangers that I think are lurking. We're not there yet because we're in the midst of the crisis. Mm-hmm. But what does all of this stimulus mean? It's great to try and get your hands on it, but broadly, what does it mean for us all?
Yeah, absolutely. No, absolutely. And I think again, we could play amateur economists for a while, and maybe we need to stop because we're going to run out of time. But, in terms of the thing that governments can do with debt, there are only a certain number of solutions to that problem. And one of them is to, create inflation and try to inflate your way out of debt. The other one is to saddle your taxpayer with higher taxes, which as you're trying to crawl your way out of an economic downturn is not maybe the best solution. So what we're going to see is how different governments start to address basically the debt bubble that is going to affect the whole world as the hangover of this whole thing.
Yeah,
so go ahead. Sorry.
No, go ahead.
No, I mean, did you have something to add to that? Because otherwise I was going to skip on just to the last question.
Yeah, no, let's go on to the last.
Okay. So let's say now that, you have whatever, a 5-minute pep talk that you can give to your landlords who are, dealing with fielding their tenant phone calls and thinking potentially also about what kind of moves they want to make or not make in terms of maybe acquiring more property or refinancing, or, if they want to let's say advance the cause of their investments through what's going on. What would your advice be?
Well, it's similar to all businesses right now. Cash is king. So the first question I ask my commercial landlords in general is do you have the cash to sort of ride through this? Do you have that extra sort of breathing room? Are you over leveraged? So I think the real winners are going to be those who have the extra cash to ride this through, or even to sort of capitalize on certain opportunities that may present themselves. Mm-hmm. Mm-hmm. In terms of refinancing, I would have the discussions with your banks. Now, messages seem to be changing on a weekly basis. From what I understood, is that while interest rates at the Bank of Canada, interest rates have come down a fair bit, banks are not necessarily passing that saving on interest rate to the investors so much, because from what I understand, their risk profile has gone up, so they're trying to layer on a little bit extra. But have that discussion with your banker. Try and get some additional financing in place or credit lines that are available that could ride you through if you don't have the additional cash. Insofar as Insofar as additional investments, it's really hard to say where this is all going. And so I don't really have a view to what to do other than, being mindful of where the unemployment rate is going, because ultimately that is your cash flow, is people's ability to earn a living and then pay a portion of their income to you as landlord. So I think that's a key metric to watch before dipping into the market. Staying close to your tenants, having the discussion, being sympathetic to them, right? But this is a very stressful and difficult time for many people. So I think being close to them, more on the commercial side of things than on the residential side of things, but having that open dialogue, understanding what they need, how you can help them with their business. Is there a sharing that you can do in terms of sharing in revenues versus just a fixed rent amount, but just staying close and hearing what they've got to say and their plan to get themselves out of it.
Yeah. And I think that's, if I can say also a bit of what I've seen on the residential side, like for me, when I have a tenant call me requesting some kind of a relief plan, the first thing I do is I turn it around and I say, okay, you're asking me this open-ended question, can I not pay my rent? Or what's your plan? Well, I want to know what's your plan, because everybody's going to have different pressures on them. Commercial tenants of one type will be one thing, residential tenants of another type will be something else. And so if you are able to listen for what's the pressure on them, and as you say, be well versed in the stimulus packages that are there, if you suddenly are able to read off, well, did you apply for this, you might cut the thing off at the knees, because it's clear that you're informed and it's not just a holiday for people to go, using that as an excuse kind of thing.
Yep. I mean, it's on the residential side, I think it's quite easy because you cannot actually get them out. So it's about documenting. It's about documenting and discussing their plan moving forward. And ultimately, stating that, you are in default. Like I have to tell you, I have tax bills to pay. I have maintenance costs. And I think walking them through your reality, there is this notion that, sometimes a big bad landowner.
Yes.
No, I mean, you're just a small business owner as well. And oftentimes, and even if you're bigger, you've got expenses, you've got staff, you've got taxes, you've got a lot. You're working from home. You've got young kids running around. I think it's advising them of all that. On the commercial side, I think it's just a bit trickier, because if we go back to our discussion on the broader economy, you don't want to be in a spot where you have many vacancies.
Correct.
Moving forward.
Correct.
So if we really see this trend of going down, you're gonna have to make some concessions and say, I'd rather have a tenant that's using the space. Even perception wise, you need your tenants. You can definitely not lose your anchor tenants at a time like this. So that requires more creativity. That's where I would sort of also get some professionals involved. Sometimes it's easier to have them have those discussions for you strategically.
Yeah. Okay. Well, look, I think that's kind of the end of my questions. I don't know. For some reason on my technology here, I don't actually see any audience questions. I don't know. Are you able to see the audience questions? Can we get somebody who's watching to just send us a comment?
There was some question, Terrie, but not regarding the subject so far. There was just concern about investing in real estate during the pandemic, but there was no specific question on the subject.
Okay. Well, look, I think at this point, if anybody has some specific questions for Alan, now might be the time.
Please do, or you can get my coordinates. I don't know how you communicate with the members, but you can email me, and I'd be happy to have a discussion with you.
Yeah, Alan, what we can do is just leave your coordinates into the comments. So if you send it to me, we'll leave it in the comments for the actual live, because I don't think there's any question right now. I think you were too clear. You didn't cover a lot of subjects, so there's no question right now. So yeah, I would leave the your information on the page, and obviously thank you for being with us, and Terrie as well. I'm on the regie. I'm Jean-Philippe Claude, by the way. I'm on the regie today. I'm not dressed to put the camera on, but I enter as a regie. So yeah, I think the question will be answered by email and phone, Alan.
Okay, very good. So I think there's a little box here that it says host chat. I'll try my luck and see if that goes through.
Yeah, if you do the host chat, I'll just copy in the comments. There's some good comments saying thank you about your franchise, about this, your truthfulness about the subject.
Mm-hmm.
All right.
Okay.
So just receiving in the host chat your email. So I'm just
so much. It was a pleasure doing this.
All right. So are we done, Terrie?
Yes, I think that's it. Unless anybody has any concluding words. I've said thank you, Alan. It's been a pleasure chatting with you about this. And like I said, it's always fun to, get things from a little bit of a different perspective, because where we are on the ground, we're all looking at our specific thing. And if we're able to talk to people who have different perspectives, maybe in that way we can get around some of the, the hype, and just that there's a lot of different kinds of information when you're not sure how much is founded. So it's a luxury, to be able to have these kind of conversations, and to play amateur economist with someone is always fun.
Yeah, it was a lot of fun. Thank you. And if there's anything else, you just let me know. I'll be happy to share any insights I've got.
Okay. Thanks so much.
Thank you.
All right. Bye-bye.
Bye.